Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also, subscribe to our channel and click on the bell button to receive important financial updates at the very earliest. Now HDFC Securities is a brokerage house from India. Here we present one stock which they believe has a potential upside of more than 41% from yesterday's closing price. Now please remember, this is not a stock recommendation. You should go ahead and do your own research. Also, consult your own financial advisor prior to acting on any of the information that you see here. Please watch this video to know more about the stock. Now the company in question is Tourism Finance Corporation of India Limited, which is available at 160.95. The price when this stock was initially recommended by HDFC Securities was 173, and the target price here has been kept at 195.50 and 227. The levels at which you should go ahead and average this stock if it was to fall was 153 to 157. Now here it could be added more in terms of buying on dips. The code for the company is TFCI Ltd. Now Tourism Finance Corporation of India Limited is a non-banking finance company which offers financial services. The company is engaged in providing of financing to projects by way of loan or investment. It provides financial assistance to tourism related / other projects in the ordinary course of business. If you were to look at the 1-year chart, you would see the company has been on a consistent uptrend throughout the year. The company is a small cap one with a market capitalization of 1299.14 crores, and the EPS being 9.3 translates into a price to earnings ratio of 17.31. Here, although it is cheap on standalone basis, but you would see that the industry P is even lower at 9.48, which makes it relatively expensive. The book value is 68.67, which translates into a price to book ratio of 2.34. The debt to equity is 1.6636, whereas the return on equity is 0.1310. The dividend yield percent is 1.24, and the promoter holding is 8.87, and it has substantially reduced since the September quarter. The 52-week high is 182.25, whereas the 52-week low is 55.35. Now, if we were to look at the reasons why HDFC Securities thinks that this could be an investment grade stock, organizational transformation could result in re-rating. Also, the lending activity is expected to pick up, and the upgradations to result in asset quality improvement would also be substantial. Now, there are some concerns as well. HDFC Securities thinks that the incoming shareholders may not be able to immediately influence the policies of TFCI and drive faster growth. Also, sluggish inbound or domestic travel and declining room rentals delaying projects are causes of concern. Also, the risk of increasing NPAs and loss in unlisted investments will also contribute to some kind of a risk going forward. Also, diversification into non-tourism book is an area of concern. Finally, they also think that the supply of shares could dampen the upside in the short term. HDFC Securities feels that investors could buy the stock at the common minimum price and add on declines to rupees 153 to 157 band for sequential targets of rupees 125.5 and rupees 227 in 3 to 4 quarters. Now friends, we are also providing the link to this research report in the description, so please go ahead and visit that as well. This is all what we wanted to show you for today. Thanks for watching, and we will see you soon with another video.